Well, here we are again. Happy Tuesday. I hope your week is off to a good start. Tonight I'm going to dive right in. I've gotten a bunch of questions recently on the topic that I want to discuss tonight about mortgage payments. I know I've talked in the past few weeks about some of the changes within the mortgage industry, most specifically having to do with criteria and qualification for new mortgages. But what I wanted to do tonight was talk a little bit more about people that currently have mortgages and that are having difficulties because of COVID-19 paying those mortgages, and what realistically are the options for them, and what do those look like. I've gotten a couple of questions about that recently, so I just figure anytime I'm getting a few questions, I know that there's more questions out there. So if you are currently a homeowner or a property owner, and you are in some sort of situation where your income or your ability to make income has been affected by COVID-19, there are a lot of different options out there for you in terms of what you can do. The first option, which this is not necessarily just for people that are impacted by COVID-19, but these are people that are looking to reduce the cost of their home anyways, would be a typical mortgage refinance. This is when you essentially reapply for a new loan on your property under better terms. Obviously, we've heard and we've talked a lot about low interest rates. Interest rates right now are, for the most part, are still very low. Qualification has gotten a little bit more challenging, but we have seen over the past couple of months quite a few people refinancing their properties. Now, once again, this is not something that somebody has to have some sort of negative impact from COVID-19. This is anybody can do this if they're looking to reduce the cost of their property. The downsides of a refinance are, first and foremost, it's not inexpensive. Depending on what state you're in, what the costs look like, and everything like that, it can be 2 to 4% of the cost of the actual mortgage at the end of the day. So there are some costs associated to it. That being said, it makes sense in a lot of times, and a good lender can show you how quickly you will absorb that cost. But there are some costs to it. So if somebody right now is struggling because of a financial situation, probably not the best bet. In addition, if somebody's recently lost their job, you still need to qualify for these. So not the best option, but it can be, depending on the circumstances, and as long as you're still gainfully employed and have financial backing coming in. Or this is another great option for people that are just looking to be a little bit more conservative with their day-to-day as the economy is doing some goofy things out there. Option number 2 would be what we call a loan modification. Now, loan modification is similar to a refinance in ways, but it's different in the sense that there really is no qualifying. So essentially, and this can be an interesting option for people that are having some sort of distress or impact on their ability to pay their mortgage. What you would do for a mortgage modification is essentially when the bank or whomever holds the mortgage decides that they will change the terms of your mortgage, either lowering an interest rate, lengthening a term, or doing something like that. Possibly I've seen it before where they've made it interest only for a period of time. There's ways that they can change the mortgage, which will in turn reduce the rate and reduce the amount of money that you pay out month to month. Mortgage modifications there isn't a qualification, but it is a selective process. So it's not like you can just call up your bank and say, hey, I'd like to pay less money now. Can you reduce my rate? It is a qualification. It is case by case. You typically have to show distress of some sort and be able to show it to them for them to consider it. And there can be some other financial repercussions, so to say. So it's not all of a sudden this is the end all to be all and the thing to do, but it is an option out there for people that are struggling. The other thing that I've talked a little bit about in the past is the mortgage forbearance. What this is that government-backed lenders are offering at this point in time a 90-day forbearance, which basically means that if you call and talk to your lender, and if you qualify, you could have your mortgage payments essentially suspended for 90 days. What this means is that they're not forgiving that amount. They're essentially putting your mortgage on pause for 90 days, which if somebody all of a sudden doesn't have income coming in, this could be a great option for them to suspend things. Now, the downside of the forbearance, you know, and there's still, it's a newer piece that we're dealing with, so there's still a lot of question marks. But as of right now, as I said, there still is a qualification for it. In addition to that, the way that at least it looks as of right now, they are going to expect repayment of that in a lump sum when it's done. So it's not necessarily, well, you're going to get some time to make this up. On top of that, there is the discussion that there's going to be interest on the deferment, so to say. So definitely some options, but definitely some things to think through. I think what's really important to note is that, as I said, there are options, but I would step back and say, if you can pay your mortgage payments, that is still going to be your best option. Just because there's a lot of red tape. This isn't just meant for anybody that doesn't necessarily want to pay right now. These things are in place, with the exception of the refinance, are in place to help people that are really in need. And I think that's important to note, because there are so many people that are reaching out to their mortgage companies right now, to their lenders right now. If everybody just starts to do it, the people that really need it may get blocked, so to say, and may not get the attention that they need. So once again, if you can make your mortgage payments, I would still suggest that you do. But if you do need financial assistance, there are options, and I think that's what's important. My recommendation to you, if you want, call me. I'm happy to put you in touch with the right people. A lot of people call your mortgage company, or you know, I usually always recommend call your top lender. If you don't have a top lender, I'm more than happy to make a recommendation, but call somebody that can kind of help get you into the right direction, so that you're getting really good advice. Typically, it also makes sense to be reaching out to a financial advisor during this time as well, to make sure that you're just making smart decisions for yourself. So that's what I got for you tonight. On that note, be kind to one another, be kind to yourself, take care of one another, take care of yourself, practice responsible social distancing. Even if your state decides to start easing up on restrictions, let's continue to be smart in this. Support the people that are out there doing great work, from the first responders fighting COVID face to face, to the people in the grocery store and the post office and everything else that are trying to keep our essential services running. I'm looking forward to getting through this with all of you, and I will look forward to seeing you tomorrow night.